Madam Speaker, H.Res. 1525 provides for the consideration of the Senate amendments to the bill H.R. 1424, the Emergency Economic Stabilization Act of 2008. The rule will allow the House to concur in the Senate amendments to this bill and vote on the text of the bill that was adopted in the Senate. Madam Speaker, today this body meets under dire circumstances as our great nation stands on the precipice of the most serious financial crisis since the Great Depression. Our stock market is fluctuating at an alarming rate, and our unemployment rate is soaring. Many of our financial institutions, some of which were deemed too big to fail, have failed or are close to collapse. Credit, even for the most credit-worthy, is hard to come by. Our once robust and booming economy is on the brink of disaster, and that is why we have this bill before us today. Like so many Americans, I have absolutely no interest in bailing out any fat cat executives on Wall Street. I stand firm in my belief and in solidarity with the American people when I say that corporate greed should never be rewarded. But the crisis we're facing today is much bigger than the corporate greed. It's bigger than Wall Street. It reaches beyond the Wall Street titans and directly into the lives of hard-working, middle-class Americans. Our savings retirement, our college savings for our children, investments in our future are all at risk if this industry fails. The financial crisis threatens our ability to get a loan even if we have outstanding credit. The crisis threatens our jobs. Madam Speaker, without decisive action, most experts believe that our economic situation will only grow worse. Credit markets will freeze, and Main Street and all of America will suffer. Families living paycheck to paycheck will see their credit card limits slashed and their interest rates increase. Families won't be able to take out basic home and car loans, and employers may not be able to make their payrolls. Take, for example, earlier this week when the body failed to pass a previous version of this rescue bill, and the country watched in horror as the Dow Jones plummeted more than 750 points. That dive, that single day in the stock market, cost our economy over $1 trillion. But when the stock market crashed, the majority of the $1 trillion that was lost did not belong to Wall Street giants. It came from pensions of people who have retired or people who have frugally worked for their entire lifetimes to save a few dollars for their family's future. It is for this reason that Congress must intervene. The bill before us is intended to rescue Main Street. By rescuing the financial institutions, we rescue the jobs, the savings, and the ability to get a loan for each hard-working American. However, Madam Speaker, as we go ahead with this bill, we must be mindful of the road that led us to this crisis. After all, if we don't know what went wrong, how can we make sure that it will not happen again in the future? And like so many Americans, I am deeply disappointed by the Bush administration's regulation policies that wrecked our booming economy. This president put incompetent people in charge of the nation's most critical regulatory agencies. Transparency was lost, business was allowed to regulate itself, and the total deregulation of the financial service industry ensued. Securities and Exchange Commission Chairman Cox just recently noted, quote, "Voluntary regulation does not work," unquote. I'll say it doesn't. And looking back in history, we saw that when deregulation occurred in the last century, it led to bread lines and to Hoovervilles. President Franklin D. Roosevelt, well acquainted with the havoc wreaked by deregulation, said, quote, "We have always known that heedless self-interest was bad morals. We now know that it's bad economics as well," end quote. President Roosevelt led our nation through that crisis by regulating the financial industry. However, deregulation proponents have removed FDR's regulations because for them, big business comes first and knows everything. Madam Speaker, that is why when the administration handed Congress an ultimatum for $700 billion blank check, which lacked the very accountability and transparency that contributed to the problem, Democrat leaders said absolutely not. Over the past 2 weeks, we've insisted that the original rescue package proposed by President Bush and Secretary Paulson be changed dramatically. And as Democrat leaders negotiated plans to rescue the economy, we fought tooth and nail to make sure that any proposal included expanded oversight, transparency, and an assurance that taxpayers will be reimbursed in full. And that is what the proposal in front of us today does. We have a three-part plan to reinvest, reimburse, and reform. We will rescue the troubled credit and financial markets to stabilize, reinvest in our economy to insulate hardworking Americans, and reimburse taxpayers for every dime. Reform is how business is done on Wall Street. With this bill, we stand up for all Americans, ensuring there is no help for Wall Street without help from Main Street. We stand up for taxpayers by requiring strong, independent oversight, transparency, and accountability for the money spent. Even an office of the General Accounting Office will be moving into the Treasury Department. And we are standing up for the working Americans by limiting excessive compensation for CEOs. We are standing up for homeowners, basically the crux of what happened here, by requiring the government to steer mortgages in danger of foreclosure to loan workout programs to prevent the foreclosures driving down home values all across the country. And we're ensuring more of the hard-earned money saved by families and small businesses across America by upping the federal protection of bank deposits from $100,000 to $250,000. I'm proud to say that 3 House committees will begin oversight hearings very shortly, and in January, with a new Congress and a new president, we will be ready to reinstate the regulations so cavalierly removed, which believed that the financial industry could regulate itself with the same dire consequences we face today. Madam Speaker, taxpayers should know that we push to ensure the government receives shares of any company it provides with aid, and after agreeing to rescue AIG from filing for bankruptcy, the government received nearly 80% share in the company. The action was reassuring enough to the market that people are now clamoring to buy AIG assets. By making sure the government gets shares of companies we aid, we're working to revitalize this industry in a way that will benefit the taxpayers who are funding the rescue. And by doing so, the new direction Congress is standing up for swift action to ensure a more sound economic future for all Americans. We are absolutely committed to doing everything possible to ensure that America keeps working, that government is also working for America, and I reserve the balance of my time.
Clerk reserves your time. The gentleman from California.